morning, ladies and gentlemen. My name is Vasil Dikov. I am a Senior Account Manager with GDMFX and I will bring you today's market outlook. We'll start with the North American markets and the events from there. The Fed officials were split on the path of future rates amid uncertainty regarding the labor market, growth, risks to the economy and inflation. Overall, the Fed officials left the options open after June meeting. However, investors believe the chances for a July rate hike are minimal following the UK decision to leave the European Union and the slowing employment growth. At a Wall Street Journal Pro event, the Fed Governor Daniel Tarullo said he is looking for more evidence on inflation before interest rates should rise. I would want to be more convinced that the underlying rate of inflation was around 2%, he said. In a report, the Institute of Supply Management said its PMI rose to 56.5 last month from 52.9 in May. Analysts have expected their index to rise to 53.3. The non-manufacturing PMI increased to 56.5, 1.4 points higher than the April reading of 55.1. The new orders index registered 59.9, 5.7 points higher than the reading of 54.2 in May. The employment index increased with 3 points to 52.7 from the May reading of 49.7, and the price index slipped 0.1 point from the April reading of 55.6 to 55.45 immediately after the reported dollar strengthened. The euro versus the dollar was trading at $1.1052 from around 1.0068 ahead of the release date. The DC index was 96.43 compared to 96.27 ahead of the reported Dow Jones shed 0.37%, while the Nasdaq Composite dropped with 0.15%. Today we have the employment change and initial jobless claims from the US. From Canada we will have the IV Purchasing Manager Index. The Aussie versus the US dollar traded at 0.7512, down 12%, while the US dollar versus the Japanese yen changed hands at 101.14, down with 0.18%. The US dollar versus the Swiss franc added 0.14%. The US dollar versus the Canadian dollar gained 0.36%. Meanwhile, the ECB has begun to extend its bond buying program to other countries on the fringes of the EU, such as Spain and Italy, since Germany and France have already extended their quota in the ECB quantitative easing. The reason for this is to ensure stability in the Eurozone after the Brexit shock. The expectations for the EU growth remained unchanged, 1.6% for 2016 and 1.7% for 2017. There are expectations that Mario Draghi will have to increase the bond buying program before its end in March 2017. Today, in the European Union and the Eurozone, we're going to have from Switzerland the Consumer Price Index on a monthly basis and Consumer Price Index year on year. Moving on to the United Kingdom, the sterling continued its downward trend yesterday as business confidence sank to a 4.5-year low. As experts have warned, the Brexit has additionally damaged the already slowing economy of the UK, and despite its plunge to $1.27 yesterday, the downward slide is far from over, according to Goldman Sachs, Deutsche Bank and Citigroup. All three banks see the sterling dropping significantly by the year's end. The FTSE 100 closed on the Dow at 6,494 yesterday. The pound versus the Australian dollar dropped with 220 pips, and the pound dropped with 120 pips versus the Canadian dollar. It was also down versus the Swiss franc and the rest of the major currencies. Today we're going to have industrial production month-on-month and year-on-year, manufacturing production month-on-month and year-on-year, and the NISR GDP estimate. Continuing with Asia, we had the foreign bond investment in Japan increased to 428.2 billion yen versus the previous of 400 billion. And the foreign investment in Japan stock back in positive territory, 113.9 billion yen versus the previous at minus 172.2 billion yen. The long isolated companies have joined forces with the mainstream DP in an unprecedented move as they seek to overturn Abe's expansion of the role of the armed forces. They're also trying to prevent the Prime Minister from gaining the two-thirds majority in the chamber needed to begin the process of revising the nation's pacifist constitution, but polls show that they may fail to thwart him. The election for a less powerful upper chamber won't affect Abe's position as Prime Minister, which he has held since returning to power in a lower house victory in 2012. And in the Pacific, Australia faces the prospect of losing its vaunted AAA rating after S&P Global Ratings lowered its outlook on the country's debt to negative. S&P cited the combination of government's budget deficits and the likelihood of a political stalemate as the country awaits the outcome of what is likely to be a very close election as the reasons behind its decision. The ratings agency said there was a 1 in 3 chance it could lower the country's credit rating within the next 2 years if it is believed Parliament wasn't likely to legislate savings or revenue measures to narrow or eliminate the budget deficit by the early 2020s. The news whacked the Australian dollar, which fell as low as 0.7464 versus the dollar from levels as high as 0.7538 before the announcement. And finally, the commodity section of the market, we had the API weekly crude oil stockpiles, which fell by 6.7 million barrels last week, declining from a 7th week in a row. The oil prices rose in early trading on Thursday, supported by a report of another fall in US crude inventories as well as a weaker dollar, although the glut of refined products and economic growth concerns continued to weigh on markets. And also, gold prices jumped to the highest level since March 2014 on Wednesday as fears over the Brexit fallout again took a toll on the markets. Concerns that financial and political instability in Italy could lead to even more chaos in Europe spooked investors even further. The S&P 500 index had a range of 30 points. It is at 2,093 right now. Gold had a range of $15. It is at 1,367 right now. Silver had a range of 68 cents at $20.60 right now. Crude oil had a $2 range. It is 47.70 right now. And natural gas is trading at $2.78 at the moment with a range of 11 cents. Today we're going to have the EI natural gas storage change, and on Baker Hughes oil recount, we're going to get that on Friday. Thank you and have a nice day.